Welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions, please ask them in the comments of the live feed. If you need any more advice after the show, join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. During today's live session, we will be running a poll, so please do engage with that and I'll reveal the results at the end. And make sure, if you've not registered yet, do so for the QuickBooks free annual conference, QuickBooks Connect. Look out for the link in the chat. It takes place virtually on the 9th and 10th of March, and the event brings entrepreneurs, small business owners and accountants together to grow, learn and connect. So good morning, everybody. My name is Judith Dugdale. I'm a chartered accountant and I work in a firm of accountants based in the northwest of England called MHA Moore and Smalley. MHA Moore and Smalley is a large independent firm, and we cover the whole of the northwest from up in Cumbria all the way down through Lancashire to Liverpool and also into Manchester. We provide all the services you would expect an accountant to do, be that year-end accounts, corporate tax, personal tax. We do help with VAT. We help businesses get ready for making tax digital, be that for VAT, and obviously upcoming will be income tax later on. We've also got an in-house corporate finance team, and that team helps people buy and sell businesses, do things like passing on businesses to the next generation through family buyouts, but also raising funds for expansion or maybe even taking on another business and growing that way. The other thing that we do, and this is where I come in to the organisation, is that we provide help on digitalising your accounting system. So myself and my team, we not only help pick the right system for our clients, but we then train and support them ongoing. And then we obviously provide the compliance work, such as the accounts and the end of year corporate tax returns. We only put people on cloud accounting software now, and we have well over 1,000 clients using QuickBooks Online, and we are an elite partner with Intuit. The benefits of using software like QuickBooks Online are so vast, and hopefully if you're watching this, you're already using the software, but no doubt there'll be bits and features within that software that you may be not using as yet. So feel free to ask any questions today around QuickBooks itself, or general business questions. One thing I wanted to briefly touch on today before we start cracking on with the questions was just to do a little piece about payroll. At MHA Moore and Smalley, we have a dedicated payroll team, and we do well over 1 million pay slips each year. It's quite a specialised area, payroll, and there's an awful lot to get right. Earlier, I just mentioned about making tax digital, and those of you, I'm sure, will be aware that there's making tax digital for VAT, and then there's coming in a couple of years is making tax digital for income tax. Well, payroll was the first of the taxes to go digital, and well over 6-7 years ago, it went digital under the guise of real-time information. And the idea is that everybody must use software to submit their payroll information now. There is some free basic software that HMRC provide that you can find if you just Google free payroll software, it will pop up. But there is also a vast array of different types of payroll software out there. Luckily for you guys, if you're already using QuickBooks Online, Intuit have their own payroll software which integrates into and is part of QuickBooks Online. You just need to turn it on separately, and it's a really reasonable cost as well. So there is the standard payroll, which would work for the vast majority of small businesses, but they also do an advanced payroll where things are a little bit more in depth and you maybe have a few more nuances, and maybe need to pay people in different frequencies and need to calculate bonuses and overtime and that type of thing, and it's a bit more complex than maybe your standard payroll. So I just thought it's worth touching base on what payroll actually is, who should be on payroll, and how you would go about working within the system. So basically, if you're running your own little small business and you have somebody that is going to be helping you within that organisation, then they're quite likely to become an employee. You don't have to employ people if you need help within your organisation. You could outsource that work. So this is where you might use subcontractors to help you. So typically the construction sector, you quite often have subbies, as they're called there, who you bring in as and when you need them. And that is the main difference between using subcontractors and having employees. If somebody's working for you and only you, and you are dictating the hours they work, where they work, when they work, and you are keeping them for a longer period of time, then they will be an employee. Subcontractors have the right to refuse to come to work. They have the right to send somebody else in their behalf, and therefore they are not an employee because they are in control of the work that is done and where it's done and how it's done. So let's say you have got some employees or you're about to take some employees on, then yes, you're going to have to set up a payroll. So to set up a pay-as-you-earn scheme, which allows you to run your payroll, really simple. You go to the government website, which is www.gov.uk. And within there is the process to follow to set up that pay-as-you-earn scheme. Once you've set up a pay-as-you-earn scheme, it'll take a week or so for you to get your scheme number. But in the meantime, you then need to set up your payroll software. Easy Google payroll software, you'll see there's loads. Like I said, if you are a fairly straightforward business, QuickBooks Standard Payroll will be more than adequate and will allow you to process the payroll within the software, fully compliant with HMRC, does all your real-time information submissions so that HMRC know how much pay you have put through for your employees. They know how much pay as you earn and national insurance that you should be deducting, and tell you how much you need to pay over to them. You can process payrolls weekly, monthly, fortnightly, 4-weekly. You can even do them quarterly, and you can even do an annual payroll. Most people go for a monthly payroll now. Once you've decided the frequency, you then stick to that frequency. You will pay HMRC the pay-as-you-earn and national insurance each month following you ring a payroll, unless you are going to run a quarterly payroll, and then you can pay your pay-as-you-earn and national insurance quarterly. If you're a very small employer and your pay-as-you-earn and national insurance amounts that you need to pay are really small, you can opt to pay that quarterly to HMRC, but you do need to speak to them before you decide to do that. If the HMRC receive monthly payroll information and there is no payment to follow, then you can find yourself with penalties and fines. So it's really important to make sure you communicate with HMRC when you intend to send those payments through. There are a few things you need to be really careful about when you're doing payroll. One of them is the minimum wage. So the minimum wage is a legal thing that you have to abide by. So it's quite complex because there are different rates for different levels of people, and it changes every single year. So currently the minimum wage for an under 18 is £4.62 an hour. So you cannot pay less than £4.62 an hour. You can pay more, but you can't pay less. If you have any apprentices, they are on £4.30 an hour. Both the under 18 and the apprenticeships in April, when the minimum wage goes up, they are both going up to £4.81. So £4.62 for under 18s now, going up to £4.81 in April. If they are aged 18 to 20, you have to pay them a minimum of £6.56 an hour at the moment, and that is rising to £6.83 in April. If they are 21 to 22, the minimum wage currently is £8.36 an hour, and that is rising to £9.18 an hour from April. And then finally, if you're over the age of 22, so 23 and above, it's not the minimum wage you have to be paid, it's what we call the living wage. And the living wage is £8.91 at the moment, and from April it will be £9.50. So you have to, just to reiterate, abide by those rates. You can't pay less. Sometimes you will find that you give your staff extras, which we refer to in accountancy terms as benefits. And that might be that you might pay them private medical insurance, you might make a car or a van available for them. And if they do have a car or van made available, you may pay their fuel. These are all what we call benefits in kind. And they are linked to the payroll system, but reported separately. what those benefits do is they change people's tax codes, so they end up paying more tax than they would do if they didn't have the benefits. The point of the benefits system is that everybody, it's a fair level playing field, and people aren't getting benefits from one employer that aren't taxable versus an employee who is getting paid everything through payroll as a higher salary and therefore paying more tax. If you need any more information about benefits, there's loads of information on the government website, so I'd have a look at that and just to make sure you're compliant. Finally, the only other thing I would like to just reiterate is about pensions. So if you are an employer and you have staff that are going through payroll, once they earn £6,240, you have to opt them into what we call a workplace pension scheme. It is your responsibility as the employer to set this up, and you have to put your employees in. Employees can choose to opt out of the pension scheme, but you cannot ask them to opt out. So they automatically go through, and then if they wish to stop being part of that pension scheme, they have to notify the pension company themselves. You will submit the information to the pension company as part of your payroll RTI, real-time information submissions. It goes through to them. Quite easy to set up a pension scheme these days, particularly with somebody like Nest or the People's Pensions or Now Pensions. Quite cheap to run, but the benefits aren't fantastic for the employee through those pension schemes because of the nature of them being so simplistic. You can set up more, I suppose, pension schemes that are a bit better in terms of the returns that the employees will get, but they cost a bit more to administer. So quite a lot of small employers do stick to the Now pension, People's Pensions. So that's just a little bit about payroll. If you've got any more questions, please do ask them, but I'll jump into taking the ones that have already come through. So I've got a question from Brandon on Instagram direct message. And Brandon says, should I register as a private limited company now in fear of the name being taken at Companies House, or should I wait until I'm financially doing well in my business to register? So, Brandon, this is quite a good question, and quite often people do set up as private limited companies to secure a name if they feel that it's something that somebody else could use, or they think that there's actually quite a bit of value to the name that they've chosen for their business. What you can do is you can register a name at Companies House and not trade through that company yet. Just because it exists doesn't mean it has to be what we call an active company. So you could set up the private limited company, secure that name, and then what you can do is you just register that business as dormant. And then each year you will file dormant sets of accounts, which are quite simple and straightforward to do. And you will do an annual confirmation statement that continues to confirm who the directors and shareholders of that business are and the fact that it's dormant at the moment. Then once your business picks up to a level where you think it's appropriate to trade as a limited company, you then update via your confirmation statement to say that you're now trading, and you will then start recording all your transactions through that limited company and file your first set of accounts at the next annual year end. So I hope that helps, Brandon. Got a question from Antonia on Twitter direct message. Antonia says, I've launched my first limited business and hope to start selling products in the next few weeks. Do I need to pay taxes on profit? Do I need to pay taxes on my income too? So, Antonio, yes and yes is the answer to that. A really, really quick one, but in a bit more in-depth explanation there. So a company pays taxes on the profit it makes. It pays corporation tax. Corporation tax is calculated on the net profit, which is after all your costs. So you will record on software such as QuickBooks Online all your sales, and you will also record all the costs. So obviously your sales are the goods that you're selling to your customers. Your costs are the purchasing of those products that you're going to sell on, or the creation of them if you're a manufacturing business, but also overheads. So things like your accountancy bill, your telephone costs, your internet costs, your software costs, your wages for any employees, your stationery, delivery costs, anything like that, bank charges, they are all what we call overheads. So you have your sales, you knock off the cost of sales, which is what it costs to generate whatever you're selling, and then you have your overheads, and then you will get to what we call a net profit, and that profit is then taxed. So currently the company will pay 19% tax on any of its profits. That is rising to 25% in 2023. So it will become more costly to have a limited company in 2023, albeit the first £50,000 worth of profit will continue to be taxed at 19% to help those small businesses. Now, in terms of your income, Antonia, I suspect you're running a limited company. You will either be paying yourself a salary, or you will be drawing what we call dividends from that company. If you're paying a salary, it goes through payroll, which I was obviously just talking about briefly before, and the payroll system will calculate how much income tax you need to pay and how much national insurance. If you're paying dividends, you put them on a self-assessment tax return, which has to be submitted each year in January, and that will calculate on the self-assessment tax return the tax due on your dividends. Dividends are taxed at 7.5%, and you take dividends out of the company once you have covered your corporation tax bill. So you can't knock it off your income to calculate corporation tax. Dividends come after corporation tax. So hopefully that explains that for you. But I would definitely recommend, if you've launched your first limited company, please do get in touch with an accountant and just run past them what your plans are in terms of taking out your income, because they will be able to advise you the most tax efficient way for you to take your personal income out of that business. I've got a question from Grace on Facebook Messenger. Grace says, we have a new employee that started midway through the month. I've put in all the details, including the start date, but QuickBooks has calculated a month's salary. How do I prorata the first month's pay for the new employee? Grace, there should be within the software an ability to say that it's a part period month. I would just double check it is picking up that correct start date, because it certainly can calculate a part month salary. The other option obviously is as well is you work out if they're saying work 14 days instead of the 30, 31, whatever the rate is. You could work out yourself for that month how much it should be and put that through. But there definitely is a way. I can't remember off the top of my head where you go to within the system to do that. But if you actually pop to Google and put in there QuickBooks Online Payroll part month salary, it will come up with a load of screen grabs and probably even a little video to show you how to do that. There's fantastic resources online. So if you can't quickly see how to do that, I would certainly recommend a quick Google, where it definitely will have the instructions on there for you. If you've got any problems, my details are at the end of the show, so you feel free to drop me a message if you're still struggling to find out how to do that. I've got a message from Henry on Twitter direct message, and Henry says, how do I set up payroll to be able to show me paying myself? So Henry, yes, what you will want to do if you're running your own business is actually pay yourself. Now, I'm going to assume you are a limited company, because if you are a sole trader, you can't pay yourself through payroll. You have to just take the money that comes, basically you're taxed on your profits that the business makes, not how much money you take out. So that is a very important thing. So just to say that again, in case I said it a bit too quick, if you're a sole trader or a partner within a partnership, you can't put yourself through a payroll. HMRC work out how much income tax you pay based on the profits that your sole trader business makes. If you're a limited company, you're a separate entity to that limited company and you are an employee, so you will put yourself through payroll. As I said before to, I think it was Antonia, please speak to an accountant before you decide how much you're going to pay yourself as a director of a company and a shareholder of a company, because they will probably recommend that you take a small salary and some dividends, but that might not be what is right for you personally. So it's really important to get some proper advice on that. But Henry, it's exactly the same setting up a payroll for you as it is to set one up for other employees. So you go to the gov.uk website, you need to set up a pay-as-you-earn scheme first. So if you just put in pay as you earn, it will come up with the right link. You go through, you get that pay as you earn scheme number, It comes to you within a week. And then you set up your payroll software, you put that pay-as-you-earn scheme number in, and then you can start to put yourself a salary through payroll, and you submit that information each month to HMRC. And it's as simple as that. And particularly if you are a director on the payroll, it will be the same amount going through each month probably. It literally is about 3 clicks each month. Very, very simple. And the system, if you use QuickBooks Online, it will post all the relevant journals into QuickBooks for you, so that your system will have that recorded for you ready. Got a message from Daniela on Instagram direct message. And Daniela says, hey, Judith, I pay my 15-year-old son about £50 a month to help me with admin and filings. He doesn't pay tax. What is the best way to record this on QuickBooks? So I've mentioned at the start about how you have to set up a payroll scheme if you are employing people within your business and paying them. There is one exception to that, and that exception is if that person is earning under £120 a week and they have no other income from anywhere else, including pension income, they actually don't have to formally go through on a formal payroll. What you can do, just as Daniela's doing here, you can pay them through the bank account or pay them cash, and you record it within your system as wages, but you don't have to actually submit anything to HMRC. And the reason for that is because they are earning under £6,240 a year. There is no national insurance and there is no income tax to pay. So therefore, you don't legally have to send that information in, because effectively, you're just going to send something in that says there's nothing to pay. It is important, however, that you know that they do not earn any money from elsewhere, because the way you pay your income tax as an individual is on your total income, not just how much you earn from one employer. So obviously, they could work for you and they could work for somebody else. And if that combined income goes over £120 a week, it will impact on national insurance. And as an employer, you are the one that's calculating that for your employee. So, Daniela, if your 15-year-old child is only earning £50 a month and doesn't get any money from elsewhere, you don't need to set up a formal payroll scheme, assuming you don't employ anybody else either. And you will just put £50 through to net wages or to gross wages on the payroll, on the QuickBooks system, and just record it as a payment, just like you would do for paying anything else. The next question is from Marco on Facebook Messenger. Marco says, I'm using QuickBooks Standard Payroll, but I'm having a bit of trouble allocating money in transactions to employee wage. For example, if an employee's total wage is £1,000, but they take out sums that amount to £1,000, what do I do? Right, so if their net wage is being calculated on QuickBooks Standard Payroll as £1,000, when you process that payroll, and you have to make sure you go all the way through the process and click to submit the payroll information to HMRC and submit that submission. Once you've done that in QuickBooks, it will post a journal into the system, and that journal will have £1,000 waiting, and it should be, depending on what your system is set up like and what you've called it, it should be in a wages control or a net wages category. So if you go into QuickBooks and look in your chart of accounts, you should see that there's some journals going through, and one of them will be hitting either a wages control account or a net wages account, or like a salaries collection. You'll see something that looks like there's £1,000 waiting to be paid. When you actually pay them through the bank, like say you're paying them weekly, but you're only putting them through payroll monthly, or you're giving them a little bit of money in advance to help them out, as you pay them, it'll come to your bank feed, and in the bank feed you put that to the category of wherever the payroll journal's gone. So like I said, if it has gone to a net wages code, you'll have £1,000 waiting there to be allocated. As you pay them, let's say £100 every few days, you put that £100 to that net wages and it will cancel itself off. So hopefully I've explained that well enough for you to see. But again, if you Google matching employees net pay in QuickBooks Online, you'll find a load of videos come up, and that will actually show you that process. Got another message from Francesca, and that's on Instagram direct message. She said, do you know how to set up a non-salaried employee in payroll? It's for a director who doesn't take a salary, but she's still eligible for a workplace pension. Now, Francesca, I'm not quite 100% certain on this, because if you don't earn any income, you don't have to be put through to a workplace pension. You can, as an employee, choose to do this. So you would just set them up as an employee, but their actual salary will go through as nil. Now, workplace pension schemes calculate how much you pay based on their salary. So if they've not got a salary going through, I don't think it's going to be something you can particularly do for a work-based pension, as in like a nest or something like that. What you would actually do is pay an amount directly from the bank to the pension for that employee, but I'm not 100% certain it goes through as a workplace pension. What I would suggest is you might need to speak to a pension specialist to double check that. I don't want to give you any incorrect advice on that. It's quite a complex thing to try and set up. So please get in touch with somebody who's got a bit more up-to-date knowledge on work-based pension schemes, because I do know from my limited knowledge they have to be taking a salary to calculate how much to put in. So apologies, I can't help you more with that. But yeah, get in touch with somebody that's a workplace pension specialist. Got a message from Beth on Twitter, a direct message from her. I want to shift from weekly to monthly payroll in the new year. How can I do this with minimum impact for my staff? So we've seen this quite a lot, Beth, over the last sort of 5-6 years, where there were many businesses that were paying people weekly, particularly those on lower wages. It was easier for people to budget. But as things have changed in society and a lot more things are paid monthly by direct debit, people now actually want to go on to monthly payroll instead of being on weekly payroll, because it's easy for them to now budget with mortgage payments, rent payments, all that type of thing. So I think you'll find that most staff want to do it. One way, there's two main ways of doing it, Beth. The first way is to shift your monthly payroll so that instead of you paying them weekly, you pay them monthly, but in the middle of the month. So they will they'll get their weekly pay and then have nothing for 2 weeks, and then their monthly pay starts on the middle of the month, which enables them to then miss 2 weeks worth of income. That's quite an easy way for you to do it, but actually it's quite awkward for them maybe on the budgeting. So what a lot of people will do is they will switch to monthly, but they will actually give people almost like a bit of a sub. So they pay them a little bit earlier, and then they get that paid back to them through payroll. They take it out of their payroll as it goes on. So they might effectively get it back over a period of time, maybe 2-3 months. So that is a lot better for staff, but it is a cash flow issue for you because you're paying out extra money to your employees and then getting it back over a period of time. So again, I would highly recommend you speak to your accountant about what's probably the best way to do it and how to best do it so it doesn't affect your cash flow. So I think that's all we've got time for in terms of questions. We did ask a poll at the start, and those poll results are in. So we asked the question, do you have any employees? And 40% of you said yes, 20% of you said no, and the rest of you said you will do soon. So that is really, it's nice to see actually that the fact that there's 40% of you who will be employing people soon tells me that there's a lot of you out there that have got growing businesses, and that's really good to see. And hopefully today, for those of you who are looking to employ people soon, you'll have a bit of a better understanding of when you need to register and set up that payroll scheme and how to go about it. So hopefully we've helped you a little bit today. Thank you very much for your questions. If you want to find out any more about setting your own business up, or maybe have some more payroll questions, please visit our website for Moore and Smalley, which is www.mooreandsmalley.co.uk. We've got loads of information on our website about payroll in particular and setting up businesses, lots of videos and blogs. And if you've got any questions that I haven't managed to answer, and I know there was obviously the question about the work-based pension scheme, if you don't get the answer you need, feel free to email me at digitalsolutions@mooreandsmalley.co.uk, and I will happily ask one of our workplace pension specialists that we have in the organisation to help you. Coming up on Ask the Expert tomorrow is an entrepreneur and co-founder of the specialty coffee shop Queens of Mayfair, and that's Victoria Shepherd. Tune in to learn all about how to launch a business in a post-pandemic world. And a final reminder that if you need any more advice, please join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. Have a great day, everybody.